Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock. With news, the IMF now expects a global soft landing in 2024 and 2025, after authorities seem to have successfully quelled inflation. But first, there was a GDP Pulse event overnight, and that delivered higher dairy prices. Whole milk powder prices were 1.1% higher than the last equivalent event a week ago. Skim milk powder prices were 0.3% higher. These gains were less than anticipated in the dairy futures market, but both continue the recent trend of rising prices. Meanwhile, the US Redbook retail index of bricks and mortar stores came in 5% higher last week than a year ago, maintaining the recent gains. And don't forget, these are off heady rises a year ago. So there really isn't any indication yet American consumers are flagging under household budget pressures in these results. And the widely watched Conference Board survey of consumer confidence rose in its January edition, largely as expected. Consumers are feeling the most upbeat now in 2 years. And there's been a trifecta of good American data out overnight, with the US JOLTS report surprising with a rise in job openings in December. They surged more than $100,000 from the previous month to over 9 million, the highest in 3 months and above market expectations, which expected to hear of a retreat. In China, market optimism for an economic rescue package is fading. Stocks fell for a third day on Tuesday, pulling back from last week's rebound. Their benchmark 10-year bond yield dropped to its lowest level in more than 20 years, as traders now expect the central bank will release additional monetary stimulus to boost growth. But direct solutions for troubled sectors still seem unaddressed. The IMF may agree with Beijing that current approaches will be enough, but financial markets remain sceptical. And Australia said that December retail sales were weaker than expected, falling 2.7% from November to be just 0.8% higher than a year ago levels. That was the steepest drop since August 2020. Overnight, the IMF chimed in with updated 2024 growth forecasts, one they raised, which was a bit of a surprise. They now expect 2024 global economic activity to expand 3.1%, an improvement from 2.9% seen in October, while they kept the forecast for 2025 unchanged at 3.2%. The key improver came from greater than expected resilience in the US and several large emerging markets and developing economies, as well as anticipated fiscal support in China. The US Treasury 10-year yield starts today at 4.08% and down 2 basis points from this time yesterday. And the price of gold will start today up another $8 at just on $2,035 an ounce. And oil prices are up $1 at just over $78 a barrel in the US, while the international Brent price is $82.50 a barrel. And the Kiwi dollar starts today at just on 61.2 US cents and marginally firmer than yesterday. Against the Aussie, we're up 20 basis points at 92.9 Australian cents. Against the euro, we're unchanged at 56.5 euro cents. That all means our trade-weighted index starts today at 70.2 and up 10 basis points from yesterday. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.